Hi everyone, welcome back to my channel. Today I'll break down how you can earn $1,000 options trading in just 3 easy steps. So I'll jump right into it. The first step is charting price levels. As I've mentioned in other videos, understanding price action is important in options trading. Simply by analyzing historical data, you can identify key support and resistance levels. And these levels just dictate the zones where the price tends to bounce off or break through. So just take some time, study the charts, identify any significant price levels. This will help you when you make the decision that's informed, of course, an informed decision to enter or exit trades, okay? So you guys can see I have Tesla pulled up here on the chart, and I have it set on the daily. So I'm just going to go through and find some significant price levels that have either respected support and resistance or bounced from support and resistance. And then, of course, also identifying any areas that would be significant to pretty much chart for a level that may be necessary to make a play for. So I won't do a whole ton of charting on this daily because I just want to kind of give you guys a brief overview of what I'm doing. Okay, so I'll do enough. That should be fine for now. Let me go ahead and drop it down to the 2 minute because I love to trade on the 2 minute time frame. So I'm going to zoom it in and you guys can see I have a level at this 190. I'm going to go ahead and obviously chart for that high, that 198. See this 192 area, very long wick on this candle. And then also I'm going to chart for this level here, 184. Okay, so I'm going to primarily focus on these 4. Let me extend them to the left so you guys can see this all the way through. This is just me going through to make sure that everything is going to add up. So for this video, I'll just simply focus on these 4 price levels, the 198, this 193, the 190 level right here, and then of course this 184. These will be the primary focus, okay? So that's going to be step 1, charting for the price levels. Now, step 2 is going to be the RSI and moving averages. And I've made videos about these indicators, so you guys can go ahead and check that out in the description box. I'll leave a couple of those videos down below. And essentially focusing on the RSI, this is going to be the relative strength index. And then, of course, the EMAs, those are going to be the moving averages. These are powerful indicators that can assist in spotting potential trading opportunities, okay? So the RSI, it pretty much measures the strength of a price, of the price movement, I should say. And this just indicates whether a stock is overbought or oversold. So when combined with the moving averages, such as like the 50-day or the 200-day EMA, you can confirm trends and identify entry and exit points. So just familiarize yourself with these key concepts. So I'm going to go ahead and pull up the RSI and the EMA. So I'm going to start with RSI here. You can edit this, of course. I've showed you guys this in a previous video. I'm going to pretty much just leave it the same just because example, and then I'm going to also pull up those moving averages. I'm going to pull up 2, start with the 9-day. I like to change this color to green, hit OK. And then this one I'm actually going to change to the 21-day, and I'm going to leave that blue. Hit OK, hit apply, and OK. Okay, so now you guys see there's a whole lot going on the screen. You guys can see that. I know this can be a little confusing for beginning traders, but again, just kind of see me through with this video, okay? So again, I have my 4 points of the price levels that I feel are going to be imperative. Now the second step is understanding the EMAs, and then of course the RSI with it, okay? So we're looking at Tesla, and we have it on the 2-minute chart. I'm going to actually drop it down to the 1-minute chart so you guys can see this as well. Pretty much how it plays out, okay? All right, so Tesla, for the most part today, we can see kind of the uptrend that it experienced, right? And it pretty much experienced this uptrend starting at about 9:32. That's when it kind of took this ride up, and it pretty much consolidated by about the high of the day, which was about 11:30. Pretty much consolidated up until then, okay? Now, I have made a video pretty much talking about any patterns that you guys can pretty much identify. And this, I'll say first, let me kind of zoom over so you can see, okay? Now, if anyone is able to spot the pattern before I even, pinpoint it, that's great. But I'll go ahead and tell you guys right here, this area is going to identify a chart pattern, and it is going to be the inverted head and shoulders. You guys can see here, this is the head, this is going to be the left shoulder, this is the right shoulder, okay? So with that being said, we know if you have any sort of understanding of how patterns work, the inverted head and shoulders is going to tell you that the stock is going to do what? Go into an uptrend, which we can see here, and it pretty much rode this all the way up, okay? So now that we know that, it's important to know how you can pretty much hop into a trade, which leads me to my third step. So step 3, this is going to be patient, be patient, be patient. It's key when you're trading options. It's tempting to pretty much jump into trades impulsively, but successful traders know the importance of waiting for the right opportunity. So always wait for the right opportunity. If you wait for confirmation from your chart analysis and any indicators before executing a trade, it can pretty much be to your benefit. So you want to wait. Rushing into trades can lead to unnecessary losses, and you guys don't want to experience that. So remember, it's better to miss out on a trade than enter into a bad one. You'd never want to enter into a bad trade just simply because you were impatient. Okay, so I'm going to go ahead and show you guys why I would have entered this trade today. So we can see here again at the 9:33 time. At this time stamp, we see, let me actually zoom it in so you guys can see this better. Okay, so around 9:32, which is here, you can see that the stock, well, first let me go back so that this makes sense. We see that the EMA is crossed at about the 9:24 mark, okay? Now, when this green EMA, which is going to be that 9-day, when it crosses the 21, this again is a signal, okay? When you see these signals or these indicators and they tell you something, 9 times out of 10, you should take heed to them and pretty much follow through with what your strategy would be. So again, I showed you guys this price level at the 190, and I told you the price level at the 184. This is going to be significant because of what we see here. The volume that was supported was at a higher mark at the 9:33 mark, which also lets us know the first clue was that the EMA is crossed. We saw an increase in volume at 9:33, and then the EMA is crossed once again here at about the 9:40 mark, 9:41. Okay, so this lets us know this has happened twice. So again, that uptrend was soon to come based on these 3 indications, right? We had obviously the price levels, we had the first cross of the EMAs, the second cross of the EMAs, okay? So I'm gonna go ahead and show you guys how you essentially would have played this out with the RSI being the point of contention. You guys can see down here I have RSI. So with that being said, let's go ahead and take a look. So right here at the 9:44 mark, I would say the RSI reached the peak essentially for that time, and then it kind of continued, and then it actually broke and then got extremely high at about 9:53. Then it pretty much kind of stayed steady, and then it dropped down, consolidated, and then went back up, okay? So it shows that essentially this particular stock at this time was very volatile, right? We see that in terms of the volume here, the volume here, the volume here. These areas are key points of contention, okay? So this is essentially how I would be able to enter a trade. I personally, let me show you where I would have entered. I would have entered this trade at about 9:40, and then I would have gone ahead and let it ride all the way up to this level of support here at 190, and then I would have took profits. Then I would have been patient, like I told you guys, and I would have just let it kind of ride out. I would have played it for what it was worth, looked at it again, and then at about the 10:25 mark, I would have hopped in this trade once again, kind of let it consolidate a little bit, and then rode it all the way up to about this 196 mark here. Took profits once again, okay? So essentially, again, you have to make sure you understand your strategy. It's important, okay? So these are going to be the 3 steps that you guys would need in order to make a quick $1,000. I know it can be the toughest hurdle for new traders, just simply because that first $1,000 mark is like a milestone. So just remember, okay? Always wait for confirmation, okay? There you have it. These 3 easy steps to earn that $1,000. Remember price levels, utilize RSI, moving averages, and just always analyze your trades to learn from your mistakes, okay? So if you guys found this video helpful, please leave a comment down below. Thank you so much for watching, and I will see you in my next one.